is with us. Sandip, will you buy now? We've broken that 5,200 range and some material changes in macros in the sense of a new leader at the finance ministry and perhaps some show of purpose in Europe. Do all these change the fundamentals enough, and crude included, make you a buyer at these levels?
Hi, good afternoon. Now, clearly the downside risk for the Indian economy had reduced significantly even prior to what happened at the finance ministry or the EU summit, because of the fall, the way the commodities had fallen, and secondly also the way the rupee has gone down. Both create a scenario where the rupee fall creates terms of trade benefit for the exporters and the even the domestic manufacturers, because it creates a sort of import barrier. And secondly, I think the fall in the commodities creates a strong scenario for reduction in current account deficit and eventually the inflation. So I think the downside risk to economy have clearly reduced significantly. Now the pace at which it recovers depends a lot on government policy action. So to that extent, I think we spent the last 15-20 days in a consolidation mode where the markets were looking to break out on one direction or the other. The likelihood of an upward breakout was always greater. So I think once this breakout has happened, I think clearly in the short run, a 300 to 500 point move at least should fructify. And subsequently, the further market direction will obviously depend on how the monsoons pan out, how the overall global scenario is panning out, and whether the government actually takes some steps on the ground.
So Sandip, to play this 300 or 500 point up move which we could see, sectorally, how would you align yourself?
Sectorally, we have increased our overweight position on financials substantially, because I believe that private sector financials will be the one which will lead the rally. So to that extent, I think that's one segment to play on. So in our portfolios, we are holding ICICI Bank, Axis Bank and IDFC. Secondly, on the capital goods front, I think the market leader Larsen & Toubro is what we hold in our portfolios, and I think that looks very well placed because the order that's already announced for the first quarter seems to be much ahead of what the actual expectations of the market for the first quarter are. So I think to that extent L&T could surprise on order booking, and to that extent be positive. So I think these segments look positively positioned, and that's where we are overweight on. As a theme, we are positive on airlines, X of Kingfisher, of course. So I think they are both SpiceJet and Jet Airways, and I think they are in a very extremely strong sweet spot for the next couple of years, given the travails of Kingfisher and Air India. I think that's another segment we are playing for.
What about autos, Sandip? The numbers that came today were a disappointment. Was that priced in, or is there fresh bad news?
See, auto sector valuations are clearly cheap. It's not that the sector is expensively positioned. And this year, I think the volume growth obviously will be muted, given the fact that last couple of years the volume growth has been pretty strong. I think the key thing will be to monitor this year will be how the margins move, because last year we saw that despite strong volume growth, margins got squeezed for a number of companies. So I think if margins improve this year because of lower gross margin pressures, I think that will be taken positively. So I think valuations are cheap. There are no near-term triggers for the auto sector. So I think one would be equal weight on this sector at this stage and look for some positives as things go forward, things move forward.
Sandip, for this upside which you're talking about to fructify, are you assuming anything by way of a reform, even if it is something which could be a token diesel, price hike? Just to ask that if we don't hear anything on that front, is there a risk the markets will sell off, or if, markets can move higher despite no reform coming through?
See, I think markets will move up irrespective, because leverage positions are low. People have been extremely negative on equities. Like first quarter, global emerging market equities got in $25 billion. The second quarter saw $11 to $12 billion outflow. And cash positions are pretty high globally. And bonds are hugely overvalued vis-a-vis equities. So I think that movement will happen. But I think that's not important. What is important is this should sustain, because I think for any wealth to be created long term, I think moves have to be sustained. And for that we will need positive policy action. So I think that's something which will be a key monitorable.
Fair enough. What about IT? It looks like a double positive with the rupee being, with the dollar getting more expensive and early moves of some kind of a support to banks directly, stepping aside from the sovereigns. That should create a positive. Is that priced in?
So I think technology stocks have not really sold out despite all the macro concerns, and that's mainly because of the way rupees moved. So I think one can't be negative on technology, but one can't be excessively positive. The key will be to watch the M&A activity, because some of the companies are sitting on huge cash hoards, and there's been news flow that some sort of M&A activity should happen in some of the larger names in the near term. So if that happens, I think that can create a positive sentiment for some of these stocks.
All right. All right, Sandip. Thanks so much for joining us and giving us your views on the market. Still flat for the market.